My chart confession. Welcome. First Lady Harmonic here. Just want to do an analysis on GJ and wanted to show you guys how I see the market, of course, how I trade the market. I do mostly harmonic fashions 99% of the time. And just speaking with someone earlier in reference to larger patterns and smaller patterns within the larger pattern, playing out the larger pattern. So I wanted to take this particular pair here. I'm on the British pound, the pound yen actually. On the daily chart, we can clearly see that we are in an uptrend because we are making higher lows, and that is what helps us to identify what particular trend we're in. And the way I do that is I'll just put my little trend line here and I'll mark it here, and then we have a what I call a smaller trend line. I'll kind of put that right there. So even if price was to break this trend line, and once we start breaking trend lines, we automatically feel that sometimes we're in a downtrend, and that sometimes is true. But because we have this trend line here, we can still break this first trend line and come down here and still be in an uptrend. And the reason why I say that is because this right here is our previous higher low. So until this low is broken, we are still in an uptrend. So if it came down to this level of support here and then bounce back up, it would still create a higher low, confirming that we still are in an uptrend. So what I did see for this particular pair as far as a harmonic fashion is from a relative high to a relative low. I saw this looks like a 618. Now it didn't touch quite the 618, and some people would say, why would I not use this one right here? And I could use this one right here, and the reason why I have not is because price seemed to have broken up above it and then created two other candles above the 786. So just for my personal preference, I use this one here because we still have a little bit of room to go, because we have broken this. Let me see if I can make this a little bit bigger. Because we have broken this higher high here, and then create another candle, even though we have a bearish engulfing here, I'm still of the volition that we are going to be, we have a little bit more push upwards on this particular pair as far as price is concerned. So that's why I chose to go up to this previous impulse leg as the starting point of this impulse leg. So I'm considering this one whole impulse leg. And then we have a retracement. Here's my 618. No, it did not necessarily touch. Scott Carney, the inventor, originator of the harmonic patterns, gives us a 3% range, so it is quite close. So I'm going to count this as a valid 618. When price does not touch completely, I do take careful notice of it, and I do watch price as to see what it does. Most time, 9 times out of 10, it still plays out. So with that being said, I have my X, I have my A, my 618 gives me is a B point, lets me know that the D point would be a 786, which would be a Gartley pattern right around here, and that pattern would look like this if and when I draw it out. So X to A, I put on the 618. B, this is the lowest of the low. You have a 38.2 to an 88.6 ratio in which price can retrace to. For me personally, just because I'm a little bit more advanced, I don't even need to measure it out. I know an 88.6 comes all the way down here somewhere. It is nowhere near here. It definitely has reached a 38.2. So I can just eyeball it right now. And then there's my 786 here, which is where price is close to. Now with harmonics, you definitely want to have two confluence factors, two Fibonacci's that at least line up together, or if they do not line up together, they create something what is called a price reversal zone. For a 786 price reversal zone, I believe it is a 272. Let's see, yes, no, it's actually a 127. So what I would do, I would take my Fibonacci extension, and it is an ABA, so A, B at the fib lumbo, not at the wick. This is how I do it. back down into A. I'm looking for 127, and let me just have it marked off on my chart. And my 127 and my 786 create what is called a Fibonacci cluster, which tells me that this is a very, very strong level of resistance. It is also, so we have two confluences, two confirmations that this is a strong level of resistance. We have a third level because in this area here is a zone, so that also gives us some more confirmation. So that is 3. It is the point of a completion of a harmonic pattern, so that is 4. So once price reaches up in this particular area here, I will be looking for a reversal. That's what I see on a larger scale as far as what price is doing. Now currently what we're seeing is price making higher highs. As we can see, is broke this high, broke this high, broke this high. But is there another pattern within this larger harmonic pattern? As I stated before, larger harmonic patterns create smaller ones as it plays out to complete the larger pattern. Harmonic patterns gives you an indication of a directional bias. It gives you an indication of where you can enter into a trade and where you can also exit a trade. So for instance, around here on this Gartley pattern, if I'm not in this trade currently, I know that when price reaches around the 155.49 area, I can look to start placing a sell. So again, what am I looking for in this current area? So now we have a larger harmonic. Do we see a smaller harmonic? Yes, I do. So I'll take my Fibonacci once again. Let me just remove all this. And I will, from relative high to relative low, let me just bring this up so everybody can see a little bit more clearly. Okay, so I have my relative high to my relative low. We have my B point hitting a 786. 786, if you don't understand harmonics, that would be a butterfly pattern. We have my C point again. Even though it has come down to the 100%, it has closed above. So most likely this is an 886, 786, 886 retracement. And then my D point for my butterfly pattern would be my 1272. And if you look closely, this is where price has hit and has rejected off of it with a bearish engulfing candle. So sellers are showing that they are entering into the market. So if I was to draw this pattern out, it would look like this. X, A, B, I'm going to use C and D. And of course we need 2 Fibonacci levels to add a level of confluence, and that would be an ABA. So I'll take my Fibonacci from A to B, back down into A. And we were looking for a 1618. Okay, and now as you can see, my 1618 and my 1272 again create a Fibonacci cluster. And you can tell that this is a very strong level of resistance, because as soon as price has hit this cluster, it has reversed immediately. So what I'm looking for is for price to probably create some type of a double top, probably come back up and complete this level of this D, this Gartley right here, and then drop. So a perfect way to trade this would be, what I would personally do is probably put a sell limit here with my stop loss above this zone, and then ride it all the way down to at least the first take profit of the larger harmonic. And you find your take profits from A to D, with the first take profit being a 382, which is right here. Let me change that to green. And the second one will be the 618, which is right here. Okay, so the 382, does it come in line with any structure areas? If I look left, I don't quite see anything at the moment. See how far back I can go. Let me see. Let's bring this down some. Get a better picture of what I'm looking at. So yeah, there's a little bit of structure over in this area. So 382, it is lined up with some structure, and 618 as well. Right in here, it's a zone. I can mark that out as well. That the 618 and 382, it does line up with some structure here. So most likely, I would definitely take this down. I would try to take it down to the 618. So if you were to get into the sell from this area here, let's say you put a sell limit here and you bring it down to the 618, it's a lot of pips. Let me just see. 1 second. In a short position, just above the D. Like say, like right around there. And I bring it down here, 618. And we're looking at about, yeah, it's good. Everything is good. It's a crazy amount of pips. Is that my eyes are going bad? Is it 160 pips? No, it's more than 160 pips. No, it was 160 pips as a stop loss. Total pips looks kind of interesting. Almost 1890. So 1,890 pips. That's a lot of pips. And when you're on a daily chart, you're going to be in this trade for some time, because each candle represents a day. So it will take a lot of patience. But if you put a standard there, or even half a standard, and you let that ride even at least to the 382, that would give you almost 1,200 pips. So just imagine what you can make on that, just by getting into the trade right around in this area. And actually, that's what I'm going to be looking to do. I'm going to see how this plays out. Most likely, I usually put sell limits on, but most likely I will do a more conservative trade, because I would like to put a significant lot size on this and then take it all the way down to this level here. So that's my chart confession for GJ. I hope you all enjoyed this. And actually, what I wanted to do as well, because if we have a reversal here, it would show that we will be probably entering into a downtrend. And this is what I wanted to show you too, how you can start to get an idea as to where price is going to be going if it's start to reverse a directional bias again. So let's say price does start to reverse from this point and come down. We've broken the second trend line, so we know now we are officially probably going into a downtrend. Once we break this level of this previous higher low, we can definitely confirm we're going into a downtrend. So if we're going into a downtrend, what is there another pattern that could be forming? Yes. So relative low to relative high, we come down to a 382. And then we have broken its high, the X, and we end up at a 113. Now 113 ratio is a sharp harmonic pattern with a D point of an 886. So that pattern would look like this. So it would be X, A, B, C, D. We just change this color to this, and let's make it a little darker so that way you can kind of see it just a little better. So you can also have, let me just do my ABA confluence factor for A, B, back into A. I'm looking for 1618 or a 224. Let's see if I have it even listed here. 1618, all right, 224. There we go. So 224 is closer than the 618. So this would be my price reversal zone, which lines up with some structure over there. So it is valid. We're going to make this one green. Sorry if I'm talking too fast. Sorry if I'm fumbling over my words. This is just how I see the market and how I trade the market myself. So yes, we have this 618 here into its zone, and now we have a possible bullish bat once we start going into our bearish trend. So again, what you could do, you can ride this all the way down to a possible 618. Price most likely will come down into this particular zone and then even come back up to retest this level is 382, or retest this trend line if it has not been retested, and then continue to fall to the 618 of the Gartley right here. So as you can see, you have one pattern, one major pattern playing out, which lines up with another pattern very close to it. We have a possible entry here, a sell entry here, and we have targets. We have your 382 of this Gartley and this 618 of this Gartley. We also have, if it's going into a downtrend, a bearish bat forming with an 886 224 confluence factor here, which would show us that we can take a buy. It would be a counter trend trade, of course, buy up into its next level of resistance, whatever level it's going to retest, whether it's here or here, and then we can take the sell back down to the 618. But we just have to see how it all plays out. Again, harmonics are directional biases, good indications of where to enter the trade and exit the trade as well. So I hope you guys took some nuggets, had some value out of this this session here. This is my chart confession. It's what I see, is what I'm watching, and I'm going to keep you posted on this particular trade as to how I'm trading it, where I got in, why I got in, if I took a loss, and so forth. So if you have any questions, please feel free to hit me up. Talk to you later. Bye.